but we're going to get started today. So basically what we're going to do is we have another review session today because we did a couple topics already on London patterns. We did a couple topics on half of bats, right? And the ones before that we did were advanced M's and W's. We did M and W off the Mayo, and then we also did 50 EMAT bounce, right? ID 50s and ID safeties. So today's review session, we're going to do our London patterns, and we're also going to do our half of bats. And the reason I'm doing this because really, the London patterns like I said before in the chats, our bread and butter. That's really what we should be looking for, on a daily basis, right? When we're trading, we're looking for our London patterns to anchor our moves for the day, whether it be like continuation moves or basically New York reversals, continuation into consolidation, things like that. But we need a London pattern to anchor that to start the day, right? So that's really what you guys should be focusing on. If you had to focus on one thing, really it would be those type 1, 2, 3 patterns to get a hold of the method and everything that we're learning. Everything else that we learn otherwise is extra, and we've already covered a lot of setups. So you guys can choose like maybe one or two quote unquote signature trades to learn, and then just focus on that, whichever ones you like. But I wouldn't focus on all of the ones that we've done so far. Like we've done a lot. So, there's like 4 or 5 maybe setups that we've done, and you shouldn't focus on all of them. Maybe just pick one or two to really hone your skills on, and then just do that either on demo or if you're doing live accounts. Just try to back test them and really try to like pick out the patterns that meet the rules, and then you'll get a little bit more proficient with each one, and then you can start adding on to the arsenal. Otherwise, you just become you're looking at too many things, right? And you kind of get distracted. So today what we'll do is we'll cover our London patterns again. And like I said, this is the bread and butter, right? This is what we're looking at every day. We have our H1, levels, bias, whatever it is that we have on the higher time frames that's helping us to figure out the direction that we're trading. If we have a super clear market maker cycle, it leads into what we can zoom in on the M15 chart and pinpoint our entries to find these London patterns, right? So this is your benchmark. This is what you need to look for every day. Now, when I look at the H1 market maker cycle, sometimes you don't get a clear cycle like this, right? It's not always this clear. So whenever you see a cycle that isn't too clear and you're kind of getting like a lot of sideways chop or something that isn't too clear to you, then just skip it. Go to something else that maybe gives you a better, clearer direction that you can look at. Because when you see a super clear cycle, then you know that the market makers have their hands in this pair and that they're manipulating the pair. If you see something that isn't clear, that usually means that they're not in that pair, because market makers aren't always in every pair all the time. There's certain pairs that they have targets for, and there's certain pairs that they're working on, and they're not always in every pair. So look for the ones that are clear to you, and then focus on those. Okay, so we have basically variations of the pattern. All right, type 1, 2, and 3. Your type 1 is going to be your standard, out of the box. This is the Asian range, this blue box, right? A move out of the box, second leg at the high of the day, and then your confirmed entries, and then taking that short, and then conversely on the flip side, a move out of the box to the low of the day, second leg low of the day, and then confirmations to take that long. Okay, a type 2 would be just a variation on that, meaning the top of the Asian box or the bottom of the box for the buys. All right, so we're looking at the Asian range box. It comes up to challenge the top of this box or the bottom of the box, gives you a second leg, and then you take that entry long or short. Our type 3s are going to look like this. You're going to have a 50% range of the Asian box, and you're going to have second leg come and test that range and then give you that entry to go short or long. Okay, 50, 50, 50, that means 50% of the Asian box, 50 EMA, and then also the liquid 50 on the TDI, which is that yellow liquid 50 baseline. Okay, what we call the market baseline. So our entry rules when we're looking at these, okay, we want the second leg M or W at or near the high or low of the day, right? If it's a type 1, it's going to come out of the box, it's going to give you your first leg at the high of the day, and then it's going to come back up to that high again. It's going to test that high and give you a second leg. All right, if it's a type 2, then it's going to come right to the top of the Asian box, and it's going to do the same thing. It's going to come back and test that high and give you the second leg at the top or bottom of the box, or the low. Okay, a type 3 pattern, well, the second leg will be at or near the 50% range of the Asian box. Okay, so you just look at that 50% dotted line in the middle for those. That can be on the box, on the dotted lines, or it can be, get trapped through them as well. Okay, so it doesn't have to bounce exactly off of the 50% line. It can kind of trap through and go through, the line, and that's kind of where you kind of get muddled, where you get a variation type 2 or type 3, and you kind of have to distinguish between the two. But in either case, you're still looking for the same thing, really, right? So candlestick patterns is going to be your entry trigger. You're going to look for something like railroad tracks, morning star, evening star, cow is a cord of wood, right? Where you get kind of two sets of railroad tracks next to each other. All right, and then you're going to get a close above or below the 13 EMA on one of those, like a shift candle. And then you have TDI confirmation, right? So you're going to have your RSI cross above or below the signal line and above or below the market baseline. That's standard on all of our confirmed M and W entries. Okay, so when you're looking at these, trade management is key, right? Sometimes you get into a pair. What you're looking for is you need to set yourself a take profit. You need to set yourself a stop loss. Okay, so we're looking to take anywhere from 30 to 50 pips on our trades, and sometimes less if the ADR value is low. You notice that our trades, our targets usually are 30 pips now on our trades, because the pairs are either they have a low ADR, or right now it's summer months and the volume is low, so the ranges are a lot smaller. So getting 50 pips sometimes is difficult when you're already catching it at the middle of the move, and maybe you're trying to get at the end. So 25, 30 pips is still a good range or a good target to hit. If you're new at this and you're looking at what to look for take profit targets, general rule of thumb I would say is for ADR pairs less than 100 ADR, you want to look at take profit around 20, 25 pips. For pairs that are more than 100 ADR, then you can look for 30 or 35 or more, something like that. Okay, but generally a 30 pip target is pretty good on all pairs. Lower ADR pairs, you're looking for 20, 25, and that's good too. Okay, so stop loss goes 5 to 7 pips above or below your perceived high or low of the day, right? So where you think the high is, it could be above the high. Also above or below the shift candle on your entry. Okay, so sometimes the shift candle, it shifts all the way down, and then the high of day is like really far away from that entry. You don't want to put your stop loss too high, right? You can still put it above the shift candle, because if they come back up above that shift candle, chances are they're not going back down there anymore, right? So they want to come back up, and maybe they miss some contracts and they need to go back down or go back up. So above or below the shift candle, or above or below the high, both of those are acceptable places to put your stop loss. Your risk reward ratio should always be 1 to 1 or better. Sometimes you get better than 1 to 1, and that's always ideal, right? But you always want at least 1 to 1 on your trades. We covered that also in the live rooms as well, but it's important, because if you're doing less than 1 to 1, then that means that you're doing more work to win than you are when you're losing. So you don't want to be doing that. Watch how the price handles the 13 EMA. This is trade management, right? How we hold the trades. If there's a close above or below against your intended direction, you could exit the trade. So in the live rooms we cover this as well, but when you're trailing the 13 EMA, you're watching the candles. If they close above or below the 13 EMA against your direction, then you can think about exiting the trade. Sometimes you don't want to exit right after the close. You maybe want to look and see what it's doing. If it's a huge, bullish candle or bearish candle in the opposite direction, then you want to get rid of that trade. But sometimes it might be just a close call, right? It just might close above, and then the next candle might, go in your direction. So you kind of want to just watch that, and that's one way of managing your trade. Another way is to use the fib tool. Okay, so the Fibonacci retracement, I use the 38.2 levels and the 61.8 levels to trail my entries. I have the 13 EMA, and then I also have one of these two levels. So if they both, go against me on these, then that's a sign for me to get out of the trade. So it's just another an extra confirm that you can add to your charts to help you manage a trade. And then we can also use the TDI RSI signal line cross, right? If you see the signal line crossing back up, the RSI crossing back up that signal line against your trade in the direction, then you can also think about exiting that trade. All right, so let's take a look at some examples. Now, I hope you guys can see this. I hope it's big enough for you, but for me to be able to put the H1 and the M15 together, the resolution is going to be a little bit smaller. But so this is your H1 chart, okay, and then this is your M15. So what you're looking for, this is a type 1 short, by the way, if you guys haven't figured that out. Look at our cycle on the H1, right? So that we have many days of drop already.
Yeah, boss.
Okay, guys, mute your mics, please, if you can. Okay, so we have many days of drop, okay, and then this right here was our level 3. We were expecting a reversal here, right, to end the cycle and come back up, but it didn't actually give us a reversal. This was our peak formation reset. Okay, this was a peak reset, right, and you can see it dropped down a level below the low. Okay, so that was confirmed reset, and now we're at level 1 here. All right. Whoever that is, can you please mute your mic? Okay, so our peak reset was here. This is our level 1 drop, okay, into this consolidation, right? So what we're expecting is we're expecting more drop, right? Another 2 levels of drop if we have a confirmed reset. So right now you can see here on the H1 and your M15, you zoom in on the M15. This is your London or your Asia session coming out of the box. You see a move out of the box, right? We're expecting another drop. So if that's the case, we want to see a stop hunt high, okay, and then a pattern, right? A second leg, a pattern, and then confirmed entry. So you can see the H1 is also below the market baseline, okay, and then the RSI is curving down on the H1. It's important that you have the H1 and the M15 lining up with your together to give you a complete story, right? You don't want the H1 saying one thing and the M15 saying another. I always give more weight to the higher time frames, right? So you want those two to line up. So you have the first leg here out of the box, okay, closes above and below the 13, right, and then back above again. We get a confirmed first leg when it closes below the 13, and then a confirmed second leg when it closes back below again, right? So it closes back below, above, below, above, below, like that. Okay, this candle right here is where the RSI crosses the signal line and also crosses the market baseline to the downside. Okay, so that is your entry candle right there, right? And then we can see as the results. Okay, so this is our M right here, right? And then this was our entry, or sorry, this was our entry right here. This is where it crossed the market baseline, and you can see it went all the way down here, right? And if you look at the picture, right, the type 1, it's kind of, looks like that, right? So this is our M, comes back down here. This is our New York session reversal back into consolidation into the range. Okay, so line those two up, right? H1, M15, make sure that they line up, and then pinpoint your entries on the M15. All right, here you go. This is a type 2 example, all right? GA type 2 short. So same thing. We're looking at our H1 cycle. We can see that we have a peak right here, peak high with an M, and we already have 2 levels drop. So we're expecting at least another level of drop here. Okay, and you can see that the RSI on the H1 is kind of forming this M. It's still above right here, right? So you want to see it kind of curving down and hooking down over at least an RSI signal line cross on this. But you can see a cord of wood here on the H1, right? 2 sets of railroad tracks, up, down, up, down. So that's a very strong signal. And then you also have this where you have, you can look at it as this is the first leg in the Asian session, and then this as your second leg, right? Or you can look at it as this as your first leg, because it does close below the 13 and then come back above and close below again. So you have 2 legs here in a multi-session, or 2 legs here right here. Okay, you have railroad tracks, right? Two big shift candles down, closes below all the EMAs. Okay, and then we have this nice M on the TDI closing below the RSI signal line, below the market baseline, and that was your entry candle. Okay, so this was our type 2 pattern. You could take a look, right? This was the result. Looks right here at the top of the box, right? Top of the Asian range. Okay, kind of pokes out just a little bit. But you can see it right here. So this drop, it actually gave us a big pullback, after this drop. So if you took this move and took 30 pips, you got out, with 30 plus pips, and then there was a big pullback, and you could have taken, there's an an ID safety on this move, right? So you could have taken a few continuation moves afterwards. So that's what I mean when you find these patterns, the London patterns, they anchor the move for the rest of the day, right? So this is your anchor for the ID50 continuation that you could have taken. So there's an ID50, that didn't work out, right? It came back up, probably hit your stop loss, but then you got an ID safety to take right after that, and then even another one with an evening star reversal pattern, right? And then a big drop at the end of the day to end the range in consolidation. Okay, so you can see on this right here, the same thing. We had the cord of wood was up here, and this was kind of curving down, right? It was right here. It was looking to curve down. It finally did curve down, and then cross the market baseline at the end. Okay, so sometimes you're going to be holding these, right? And if you're using the 13 EMA trail, you might have gotten stopped out, here on this trade, and then got back in on the ID50, the ID safety, right? You still would have made a little bit of profit on this one if you got in on this entry, just a little bit maybe. But then you have continuation moves off of this anchor move. Okay, so that was our type 2 example. And next we're going to look at a type 3. Let's wait for that to come out. Okay, so type 3, this was a long entry. We haven't had a long entry in a while, right, because everything's been selling. So this was a type 3, because we have a type 3 off the 50% of the Asian range, right? So this is the Asian box, 50% level. You can see that we have one leg here, okay, double railroad tracks, one leg here, closes above the 13, then back below, and then back above again, okay, and it bounces right off of this 50% line. You can see the wicks coming right off of that line, okay. You can look at our H1 chart, okay, so we have a big drop, and then it's looking like a reversal here, right? So we have like a head and shoulders formation here, and then like a level 1 rise, and it's looking to kind of push up more. You can see that's the H1 is all pointing up, sloping upwards. RSI is above the signal line, crossing above the market baseline, or sitting on top of the baseline really, and bouncing upwards. So this is still looking to go up, and then you have this type 3 pattern that emerges in London, okay, gives you this second leg. And you can see we have a TDI confirmation. We even have a mini W in here, okay, and above the market baseline. So that was your entry candle. This was the result, okay. This candle right here was your entry, and you can see it comes back. It gave you a little scare, but your stop loss is down here, right? So your stop loss goes below the shift candle, okay. Comes back, doesn't hit your stop, and maybe got a little bit of drawdown, and then bounces straight up from there, all the way to the top. Okay, this is an example of using the 13 EMA trail would be to your advantage, because if you saw this big candle and you got scared and you closed out, right? It didn't close below the 13. You could have held on to it, right? And then this next candle bounced right up from it, and then it came back again, touched it, went back up, came back again, touched it, went back up. So all of these little mini scares that could have got you out of the trade would have saved you to the top here, right? If you held it to the very top, and depending on what your take profit was, whether you set it to the blue tracer or whether you have it like a 50 pip target or a 30 pip target, you would have hit it if there was anywhere beyond this range here. Okay, so that is our type 3 results. Okay, it looks, you can see the picture here, bounces right off of the 50 and then comes straight up. This is the reverse before New York, right? We got a V spike. Sometimes they just give you a V spike reverse, or a top rather, and then a W into consolidation to end the day. All right. So the next setup that we should review is I know that you guys love it. Is there a half a Batman, right? So a couple rules for the type 1 half a bat, and there's two types. Remember, we have type 1 and type 2. We have the type 1, meaning the outside structure is the first leg. The price needs to close above or below the 13 EMA, okay, then back over again to challenge the first leg. So closing above or below 13 EMA gives you your first leg, then it comes back over again, right, below, then back above to come back to challenge that leg. Price fails to reach the first leg by 10 pips or more. Okay, so it needs to be more than 10 pips, the distance between the first leg and the second leg. All right, so price fails to reach the leg by 10 pips or more. Entry trigger is a shift candle, 10 to 12 pips, at least 10 pips on some lower ADR pairs. You want to see something at least 10 pips to be qualifying as a shift candle. Higher ADRs maybe to see 12 to 15 pips, something like that. Shift candle needs to close above or below the apex or the nadir to take the trade, meaning the middle structure of the M or W. Okay, so price needs to close above or below 13 EMA with TDI confirmation. That's our standard, right? Need to have that under M's and W's and everything else. Okay, so rules for the type 2. Outside structure is the first leg, same thing. Price needs to close above or below 13. Also the same thing, and then this is where it gets different, right? Price traps off of the lower EMA, usually the 50, and then it will not go back through the 13 EMA again, okay? So the next candle, you'll see it'll trap the 50 EMA, but then it won't go past the 13, and it'll shoot up or drop down.
Yeah, I love it. I love it.
Can you please mute your microphone, please, whoever that is?
How nice. How many people? Wow.
Okay, I will have to do it. All right, sorry about that. Okay, so entry trigger is a shift candle, right? 10, 12 pips or more. Shift candle needs to close above or below the apex of the nadir, same thing to take the trade, and then price also closes above the 13 EMA with TDI confirmation, okay? So that's our standard entry rules for type 1 and type 2. Now let's go to our examples. So this is a type 1 example that we had just yesterday on EU. All right, so if you look type 1 half a bat, we have an outside structure for our first leg. This makes an outside structure, right? And then the second thing that we look for is the distance between the first leg and the second leg needs to be more than 10 pips, okay, which this is, right? And then what you're looking for is this is your shift candle, which closes above the 13, okay? But we can't take this trade on this candle because it does not close above the apex. This is the apex of the structure. So if this is your first leg, right, you got to close below the 13, then back above, right? That gives you your first leg. Then it comes back down below the 13 and back above again. That's your second leg, right? This is the shift candle that gives you your second leg, but it doesn't close above the apex. The apex is the middle structure, right? This thing right here. So it has to close above that. The next candle is the entry candle that closes above the apex. This is your entry candle. Okay, so you can see from there, that's also the candle that gives you your TDI confirmation. This candle still hasn't crossed the signal line yet. Okay, just barely crossing the market baseline, but it hasn't crossed the signal line yet. All right, so this candle is the one that gives you that confirmation that you need, TDI confirmation, and then also shifting above and closing above the apex. All right, that would have net you a 65 pip trade. And like I said, if you have your take profit anywhere, like 30 pips or 40 or 50, or even below this 0 level, which is also a good area to take profit, you would have hit your TP. Okay, so next is another type 1 example that was also yesterday on EJ, right? So whatever EU does, sometimes you'll find a similar setup on something like an EU or EJ or another euro cross pair, right? So this is an EJ half bat type 1. All right, the outside structure for the first leg is right here. Okay, so we get an outside structure, first leg created, closes below the 13, back above, right? Then the second leg closes back below the 13. This technically could be your second leg, but then it comes back down again. So here is our second leg right here. This is the shift candle that closes above the 13. This is large enough to be a shift candle, but same thing, right? This candle doesn't close above this apex, right? This is the apex. So you need a shift candle to close above the apex. The candle that does it is this one. Sorry, distance more than 10 pips. This is your entry candle that closes above the apex, right? Shifts above all of this. That's your entry candle. Your TI confirmation is on that candle as well. RSI closes above the market baseline, crosses above the signal line, all right? And then that trade would have gotten you 70 pips if you took it to the top. So any of these areas, if you took take profit at these, like a 30 pip take profit to 50, or if you took at the 0-0 level, you would have hit your take profit. Okay, and 13 EMA trail worked beautifully here as well. Looking, you can see like you never even came close to closing below the 13 at any point up until here, really. Okay, so that's a type 1. So these are type 1s. These are a little bit easier to see, right? You can see, a clear first leg and second leg, and then you can see a clear shift. And if it's above the apex, you take it, right? It's above the apex, you take it. That's the shift that confirms the entry, and also your TDI confirmation as well. Now, the next examples I'm going to talk about are type 2s, which are a little bit harder to see. All right, this is probably the one that you would have more trouble with identifying, especially on the live market, because you want to be able to see the trapping of that EMA, and it's sometimes it's difficult to spot. So this is a type 2 example on Euro CHF. Okay, and it's one of the pairs that we don't really look at and we don't really trade because the ADR is really low, right? The ADR on this pair is like 60 or something like that, something very low. But sometimes it does give you these setups. So we have our first leg, outside structure, right, in the Asian session. Second leg comes out of London, okay, and gives you this big shift upward. Now the distance between this and this is obviously more than 10 pips. This actually was, the shift candle would qualify as a type 1 half bat already, right? But then you can look at this area right here, the very next candle that closes below the 50, traps that EMA, right? You close below the 50, but then the next candle doesn't close below the 13. From there, this candle just shoots straight up. So this is how you get your type 2 condition, okay? So I want you to take a look at this because it usually happens right before a cross of the 1350, all right? So if you're looking at the chart, it looks like the 1350 is about to cross. This condition might come up. So you get a shift candle, it'll close above the 50. You can see this big candle closes above, then traps by closing back below it, right? So it's like a trap move. Then the next candle will go shift straight up out of there, okay? But it won't close, all of this won't close below the 13. It'll bounce off the 13 when doing that, okay? So ideally for a sell, what you want is you want the 50 EMA above your 13, and you're looking for them to just about cross, right? So in the live, obviously you won't be able to see them cross first, but you'll be looking at this, and you'll see that this is open and narrowing and looking to cross. So this shift candle comes up, the next candle closes down below the 50, doesn't close below the 13, and the next candle bounces right up and then goes up and away, right? So that's what you're looking for in that. You're trapping the 50 EMA with this candle, right? Up and then down, and then does not close below the 13 here, all right? This is your entry candle, okay, for that, because this is a shift candle that closes above, the apex. The apex is down here. So like I said, this shift candle already qualifies as a type 1, so you probably could have gotten 2 entries on this. So you could have taken the entry here for a type 1, and then you saw this condition in another shift, you could have taken a second position here, or waited for this pullback to take a discounted position, okay? And then the TDI confirms, obviously there you can see it's outside the bands, but it's crossed above the signal line and above the market baseline. When it's out of the bands like that, you can see it gives a very violent move up, right? A nice momentum move up, okay? Now because this is a low ADR pair, the pips aren't very high, right? So it's only 25 pips up here, but if you got 2 entries on this, right, that's over 50 pips that you would have made on that trade. Okay, All right, so now let's look at another type 2 example. This was on GN, okay, another pair that has a high ADR, right, very high ADR, 132, right? This one has also a high spread depending on your broker, which is why I don't really trade the pair because the spreads sometimes get a little bit crazy, and also the moves get kind of crazy. But this is a half bat type 2 example that we have here, so we can see that this is the outside structure that makes a nice big fast vector candle that comes down, right? Creates this outside structure, first leg. So you're going to close below, then close back above, right? Then close below, and then back above for the second leg. Sometimes you won't get, on a type 2 example, you might not get a close below the 13 for the second leg. It might just touch and bounce off, right? And that's what we're looking for this EMA trap, because what happens is you see that this green candle closes above the 50, almost closes above the 200 as well. Sometimes you'll get it to close above the 200 when the EMAs are close together like this, right? So you get a close above the 50. The next candle comes down, closes below the 50, trapping that EMA, but does not close below the 13. Okay, the next candle here is a green candle, right? So this actually closes above, doesn't close below, right? So even though you can see that it's crossed, it's not closed below that, right? It closes above it. So that green candle closes above it, and the next candle is a huge shift up and out of there, right? So this distance is obviously more than 10 pips, right? The distance from these legs. Okay, and then this is where the 50 EMA gets trapped. This candle goes up, closes above the 50, comes down, closes below the 50, does not close below the 13. Okay, then you have this little inverted hammer here, and then this big shift candle afterwards. This is the entry candle that closes above the apex. This is a very large shift candle, especially on a high ADR pair like GN. This candle could be huge, right? So ideally what you could do is you could also wait for the pullback. You can see here this pulled back all the way almost to 50% of the candle, right? And get a pullback entry. When you get a large shift candle, generally you do get a pullback, right? I mean, sometimes you don't, sometimes they just get out of there. So if you want to take this entry at this candle because you're afraid they might not pull back, you can take that entry. And then if you see them give you a pullback, then you can take a second entry, you know. That is going to be confirmed with your TDI obviously first. You're going to have to see that TDI confirmation. This one is already way above the market baseline. You see a nice big angle of separation here. That's usually very nice to see. Okay, and then your TDI confirmation. Since you got this big shift candle here, you're not getting too much of this move, only about 25 pips to the top of this. But if you took this pullback entry, you could have got another 35. So if you took two of those, added together, it's about 60 pips on that trade. All right, so that is a type 2 example. Now it's harder, like I said, it's harder to see these, and especially in the live markets, you're not, your eyes aren't really trained yet to be looking for this kind of activity. But when you do see it, like you see this big outside structure, and then you see, kind of a half bat type 1 forming, look at this condition and see if, the 13 and 50 EMAs are crossing or not crossing, because you can see here it's usually when it happens is right before they're about to cross, right? This activity makes them cross. It gives them that cross finally to cross over once they've done that. So you watch out for those, and then you can see if how often that happens on the charts if you go back and back test. But like I said, these are more difficult to find. Okay. All right, so that's pretty much it for the lesson for the review. What I'm going to try to do with you guys is I'm going to go through, like I said, we're going to change the weekly webinars to one topic per week, and then Sundays we'll do our weekly review and then review our setups and things like that. But I also want to do like review sessions every few setups, because I don't want to go through. I just want to like blow through all the setups and then have you guys get overwhelmed with stuff, and especially for the new people that are joining. They have 5 setups to learn right off the bat, so it's kind of tough for them to kind of play catch up. So we're going to do a little bit more of a review in between, because I think it's important to learn new stuff, obviously, but if you're learning too many things at once and you're trying to focus on too many things, it's also not good. So what I want you to take away from these webinars is I want you to find a setup that appeals to you. I want you to find one that you like, and something that you can easily see or easily recognize, and then I just want you to focus on that setup, or 1 or 2 setups if you can do 2. Okay, and then use that and then make that your signature trade. Okay, make that the trade that is your go-to trade, so that you have something to fall back on when you see it. That setup on the chart. You're like, that's my trade. I know exactly what to do in that situation, right? So that's kind of what you want to get to the point of doing. All right. All right. So that being said, are there any questions on what we covered today? We'll look at the chats real quick. All right. Yeah. So there was a little disturbance today. With sorry about that. All right. So any questions at all? Nobody. This was a review session, so maybe obviously it was some of this wasn't new stuff to you guys.
Jeff, I was going to say, when you're trading the 13 EMA,
yes.
Obviously I found out with a few trades that sometimes it goes above it, like one candle or two, and then drops below back again.
Yeah.
So I think I was in a UJ trade earlier this week in a sale, and I was doing the trailing, but I had it by about 4 to 6 pips above the EMA, and worked quite well to me. So that's something else that I personally find that would be easier for me myself, but that's just.
Yeah, it's on a case by case basis, because sometimes it works and sometimes it doesn't, and then you just have to kind of take it candle by candle, like I said. So you watch candle by candle, you see how it reacts to certain levels, or what it's doing. Sometimes, like you can save yourself a big loss, but sometimes you'll prevent yourself from getting a take profit or something like that, right? So it's kind of hit or miss sometimes, but you tweak and you find out what works for you. Like, that's why I use not only the 13, but I also use the fibs, and then I just look at the different waypoints that it gets to, the different levels where it kind of stutters. So yeah, but that's going to take chart time. Is going to take practice doing, and like I said, for the new people that are just looking for setups and trying to get your TPs, don't worry too much about that. Try to minimize your losses as much as you can, and then just go for round number of TP targets. Like, go for 20 pips or 25 pips or 30 pips. And then just try to get some consistent wins under your belt and get comfortable with the setups, and then that'll just help you with identifying future setups, and being more comfortable on the charts and things like that. All right. Okay. Anybody else? We can go for new set. Yeah, I mean, it really just takes practice. Like I said, I wouldn't try to practice all of the setups that I've gone through, all at once. Like I said, just pick one or two, really master it. Then you can add a new one. After you feel comfortable and confident, and if you've been able to pick off a few of those trades with confidence. Like I said, you want to be able to look at the chart and look at that setup and say, that's my setup, and I know exactly what to do right here. And then you have to be able to feel that way about that trade to make it your signature trade. And then once you do that, you can move on to the next one. Okay. All right. You're welcome, guys. So this wasn't a long webinar, so this should be okay for upload and quality. So I'll have this up on the site, shortly. If you guys have any other questions, please, don't hesitate to message me. But otherwise, good webinar, and I'll see you guys in the chat rooms. Have a good night.